Welcome to another AIS video lecture. In today's lecture, we are going to do the progressive text question. This question is more complicated than the simple VLOOKUP that you have done in the previous online video. This question requires you to have some prerequisite knowledge. Make sure you know the VLOOKUP formula for the approximate matching. Please go back to the tutorial video on VLOOKUP and try the lecture exercise and the tutorial question on VLOOKUP before attempting this question and before watching this video. This video is divided into 3 parts. In the first part, we are going to read and analyze the question. In the second part, we're going to ask ourselves how simple VLOOKUP differs from the progressive text question. And in the third part, I'll go over with you how to do the progressive text. Step 1. Understanding and analyzing the question. This is the progressive text question. You are required to calculate the tax payable for various clients of the company. The tax payable is based on the chargeable income per annum of the individual. The tax rate for the respective chargeable income intervals are as follows. The first 5,000, no tax is paid. 5,001 to 50,000 per annum, tax is 11% plus a base tax of $0. 50,001 to 70,000, you have a tax rate of 19% and a base tax of 4,950. And between 70,001 to 100,000, you have the tax rate of 24% and a base tax of 8,750. Above 100,000, the tax rate is 26% plus a base tax of 15,950. In tax returns, cents are rounded to the nearest dollars. We are required to draw the VLOOKUP table and to give the VLOOKUP formula to calculate the tax payable. If you notice at the information given, unlike the simple VLOOKUP, we are given an additional information called the base tax. In our second part of the video, I'm going to explain the implications of this additional information. All right, just so we already understand the question, we are supposed to calculate the tax payable based on the taxable income. The taxable income is given in this range, and there's a tax rate is given here. Step 2. How does the simple VLOOKUP differs from the progressive text question? To understand the key difference, let's look at this example. Suppose I earn $80,000 per annum. Now, in a simple VLOOKUP case, we use the whole 80,000 and we multiply by 24%. But in most countries, this is not the case. They use what they call a progressive tax, where each tax bracket has its own rate. So in the 80,000 case, we just cannot use the whole 80,000 and multiply by the 24%. So we cannot use or rely on the simple VLOOKUP like what we have previously done. In our case, the first 5,000, no taxes is paid. We don't pay any tax for the first 5,000 block of income. Between 5,001 to 50,000, we pay 11%. That means 45,000. How do I get 45,000? 50,000 minus the lowest tax bracket. All right, just notice at the lowest tax bracket, 5,000. All right. So this 45,000 we multiply by 11%. Then the next 20,000, between 50,001 to 70,000, we multiply at the 19% tax rate. And any amount over the 70,000, we multiply by 24% tax rate, right? So the last amount in this example, we are using 80,000. So the last 10,000 amount is multiplied over 24%. What is the solution then? How do we solve this problem? Definitely, we cannot just use the simple VLOOKUP. So we need to devise a solution. The solution is to use what we call a base tax. A base tax is all the taxes from the previous tax interval. So for example, in our case, 80,000 example case, the base tax we use must refer to all the previous tax brackets, the tax intervals that we have calculated, right? So the base tax must include the first 5,000, which is no taxes is paid, the next 45,000, and the other 20,000. And the last amount over 70,000, in our case, is 80,000 minus 70,000, that 10,000 is taxed at 24%. And then we have to add it with the base tax. Now, when we use this method, there are certain implications. In the first column, unlike the simple VLOOKUP, we have to deduct $1, right? Because we are, in our question, we don't have cents. So we have to deduct $1, right? Notice in our example, the lowest closest bracket is 70,000. And this 70,000 refers to the base tax and is used to deduct the taxable income of 80,000. So if you notice in this diagram, our 70,000 refers to the tax from the previous tax intervals, all the taxes from the previous tax intervals. And this 70,000 is used to deduct from this $80,000 that we have earned in a year. All right. Once that amount, the last amount, we are then multiplied by 24%.